Good evening. Good evening, good evening. We should be live and good to go. Hope everyone's doing well. Let me know if you can hear me, see my screen, everything works, etc., etc. That'd be fantastic. Okay, looks like everything is functional. That always helps. Hello to the usuals and anyone new joining. Hope you had a productive weekend. Now that we're part of the big boys club, and this was a trend a bit before that as well, volatility falling off during the weekend. So, I mean a little bit anyway, nothing drastic. But here we are, it's a new week. Yada yada, motivational speak. Looks like you have cold. Is my camera on? No, I don't have a cold at all. I don't know, it always takes me a while to get shouty on stream, and then everything sounds like it should. Okay, cool, let's get rolling. First things first, thank you to Bybit for sponsoring Technical Roundup. The links to our sponsor can be found in the description below if you'd like to support the stream. It's been updated with their new Christmas-themed trading competition, as ever. So if you were a fan of the other one, I think this one's just a non-team solo one, but be sure to check that out. I think it's the first link in the description, so thank you to Bybit for that. Second of all, if you haven't subscribed to the channel already, do so, because it's a good idea. Take my word for it. And like the video if you haven't already. And maybe you want to wait to do so later, that's fine as well. But those small button-clicking actions on your behalf are very helpful for the channel. And everyone's been great at that, so thank you in advance. Right, so as the title suggests, Bitcoin resistance at all-time highs. And it seems to be this recurring theme of this level, which I don't really love. And we sort of discussed why in the previous session, but open-minded as always. If the market wants to use it, then we will also pay attention to it. Hello Paul, Richard, David, Fantasy Cricket. Very nice to see all of you on this Monday evening, and anyone I missed as well. I don't want to turn this into a roll call, but I'll do my best. So we've also had the monthly close was when, yeah, I mean the monthly close kind of last session. You're not going to do a whole lot with this type of close, given just how far away we are from candle structure, really. So in those instances, we've got the all-time high as a helpful reference point. I think the monthly open and low are useful reference points as well. But in terms of more level-based support, resistance, structure, what have you, I think the time frame is materially less useful around here than it was, let's say, at 10.7, right? So that's what we'll have to deal with. The weekly time frame, which is the one mentioned in the title, so the level where the market is finding resistance was, or is, because it's happening at the moment, the highest close, or the previous highest close, I suppose, on the weekly time frame, right? We had this whole rally, which formed the top, and this is the highest weekly close on that time frame before the market pulled back, and that seems to be where we're currently struggling. I'm slightly surprised, purely based on technicals, because while you know that I love my candle opens and closes, especially the highest closes and lowest closes, for me, the probability of these structures doing a whole lot, excuse me, the probability of these structures doing a whole lot tends to kind of dissipate if they are based so close to all-time highs or all-time lows, whatever. And the basic logic is, you know, everyone essentially who's ever bought Bitcoin around that type of level is in profit. And just generally, it's the path of least resistance, if you will, no pun intended, is just to go higher. And so if you've broken much better structures on the way up, it'd be an odd spot for the market to pull back. But nonetheless, that is where we are right now. So for anyone paying attention to weekly levels, I think the all-time high close is significant. We then have the two structures making up the weekly range, which have been decent support resistance as well here, right? And frustratingly, while I was looking for an entry, as you'll recall, below previous week's low, didn't get it, and actually didn't get a test of this level either, so boo-hoo, I suppose. And then the final kind of useful thing to add on the weekly time frame is just where the last weekly close before this bullish leg, where that took place. So if we're talking kind of local support, if you like that sort of stuff, I would also add this level here. I'll just make it in blue. I know it's going to disappear because it's a bloody screenshot tool, but there we are. I think that here, there, is generally a useful weekly chart. And that's kind of what I've got right now. So in terms of resistance, is it an amazing level? No, not really. But if the market wants to use it, who am I to suggest otherwise? And if we do get a weekly style pullback, and again, there's not enough evidence quite yet of that happening. I'm going to discuss that on the daily time frame. But if we get a pullback at weekly resistance to weekly support, I think the first real stumbling block, obstacle, or whatever you want to call it, is this lowest weekly close. And then if we get something more sizable, we'll have to take it one level at a time with the previous range high, previous range low, etc., etc. But again, we are some way from that developing, but it's always useful to have these areas mapped nonetheless. Trust me, there is... Oh, God, I hate saying trust me, but... in my opinion, there is nothing worse, having experienced it, than the market just absolutely flying or just absolutely nuking on a high time frame. So we're talking really big percentage swings, and you didn't plan for it to go that high or that low. So then, in a panicked and rushed state, you're looking at these higher time frames, trying to be quote-unquote objective and find levels. So it's much better, even if you don't think even if you don't think they are going to be tested, just have them on the chart. It can't harm you, right? There's no harm in doing so. So I mentioned resistance on the weekly time frame, and that there's yet to be a case to be made for that type of big pullback on the daily time frame. Let's just add that since we've discussed it. Let's do this. Oh, well, you can see that's where the daily level falls in as well. That's great. Weekly lowest close. So you can see confluence, which is something we like. And then we're down to the daily time frame. Okay, not the best picture in the world. I've already had a couple of pattern inquiries, like, is this a pennant? Is this that? Is this the other? I don't think it ultimately matters too much. Patterns aren't something that I trade in isolation, and it's more the kind of levels, especially if they align with these patterns, that I give a lot more weight to. So you'll recall, and again, not all too much has changed, just look at the chart, right? Since the last session, and the kind of main structure, I suppose, that formed on the daily time frame was we had this break in daily market structure, right, through this swing low here. Okay, that is typically a sign of weakness, a sign of bearishness. And it was especially so, excuse me, I keep clearing my throat. I don't actually know what's up. Let me take a sip of this water I've got here. I think it's the first time that's ever happened. Right, 1 second. I'll mute my mic so you don't have to hear the ASMR. Okay, should be alive and well. No guarantees, though, you know, in times like these. Anyway, daily time frame breakdown. And again, daily market structure, something I generally pay a lot of attention to. It just works, right? And doubly so because, as you'll recall, on the way up, this thing held up like nobody's business, right? Daily market structure was the most reliable, I don't want to say indicator, but tool, I suppose. And once we had that shift in behavior, understandably, some participants became more risk averse or what have you. Again, this was a pretty tricky area to trade. Why? Well, because it's the first real dip. This was like a double-digit Thanksgiving dip, etc. During the whole trend. So it's a good opportunity. But at the same time, it was the first break in market structure, something that had been consistently present throughout the uptrend on the way up. My personal decision, it's one that I tweeted and tried to explain the logic within the character limit, was that while I think that's significant, the daily break in market structure, I just don't want to hedge or sell it on any type of retest, because at that point, your invalidation ends up landing at more or less all-time high, right? If you know, here, and then let's say the market just accelerates, you may end up getting back into the market in an area where you really wanted, you know, you could just end up chasing your hedges or what have you, right? Or even puking your bearish retest trade at possibly the worst or most inconvenient or generally uncomfortable place to do so, right? So I would just rather not hedge at all or hedge at a worse price, and that blew through the bearish retest setup and hasn't really done anything since then. As you'll recall, good bearish setups that fail are bullish, and good bullish setups that fail are bearish, right? It's one or the other. Like, if you give one side of the market a really good opportunity and they don't take it, that's for me a sign of underlying strength or weakness. In this case, the bears got a nice setup on a platter, right? The first daily break in market structure, and then the retest, and then as indicated by the daily candle, no dice. No dice. The benefit of that is, of course, using that logic, we now have a nice level to deal with. For me personally, it's look, I've seen this consolidation mapped out as the support. I think that's totally reasonable. I've also seen the lowest close, highest close pre-breakdown mapped out as support. That's totally reasonable as well. I think what most have in common is the daily level closer to 18.4 or wherever this is that this structure lands, and that's kind of what I'm using as well. So if we just overlay or return the levels that we've got, we can see some important, or for me meaningful, confluence between 82 and whatever 8400, which is that weekly support or the weekly close before this run up, which lands at the lower boundary, right, 18.2, and then we have some further evidence that this level is significant because the daily lands pretty much in the same spot at 8.4. And I know a $200 price range may seem a bit wide, but if we're dealing with weekly and daily levels, it really isn't, right? This is kind of certainly enough to be confluence. So with all that context provided, where is the market like right now? Well, it's obviously stuck, right? It's in a range, but what's that range comprised of? The upper boundary for me is that all-time high weekly close level, which we've been unable to find acceptance above, or whatever you want to call it. Even just looking at daily structure, you've had lower highs coming into it and higher lows. That's your typical triangling type of structure. Okay, so consolidating in this area. So that's the upside cap for this, and the downside cap, although less tested, is comprised of these two confluent levels at 8.2/8.4. Okay, so that's kind of just to provide, we built it all the way for the monthly, but providing some overview or context for the market right now. Multi-time frame resistance at 9.4, which is why we haven't blown through the level yet, just purely on technicals. And the downside wicks are more or less being caught by weekly and daily structure at 8.2, 8.4. To be more specific with regard to market microstructure, order flow, whatever you want to call it, at these levels, what we've seen is, as we kind of discussed last week, and that behavior has been a bit more muted given we've been further from all-time high, but the pattern is generally still there, or just hasn't changed enough yet to lead to a breakout. And that pattern is the derivative side of things, the less informed participants, retail, which we all are, whatever you want to call it, whatever blanket term suits your fancy. There's a perception that there's a free trade on the table, right? And that free trade is understandably longing the all-time high breakout and catching basically a free overextension past all-time high, at which point there is absolutely no technical resistance. So, 21K, 22K, 23K, whatever, you name it, who knows what the books would look like, right? So for those participants, that trade is really attractive because you probably get a tightened validation, all-time high break, and, who's selling certainly after that. And so what happens is derivatives and those longs essentially pile in at resistance and get smacked down by bigger sellers, right? So whenever the market presents a free lunch, it's probably not as free as it looks. And so to use more colloquial terms, you had ape buying at resistance with really high leverage. They get washed out. So-called smarter or more informed participants who aren't using derivatives but are spot-based or cash-based buy the dip. And that's kind of where we've been for the time being. And that hasn't changed yet. So that's just some insight as to these failed breakout attempts, right? And we've seen evidence of that. Again, it's been less drastic in the past week, but certainly on the first few attempts, huge wipeouts in open interest, etc. when there's the ape long breakout attempt, and it just gets completely swatted down, right? So in terms of trade ideas, right, or stuff that I'm looking at, things which seem reasonable to me, I'm not comfortable playing the top side of the range on leverage for any type of breakout. That's been washed enough times for me. Those setups have been crushed enough times for me to just not give it a go. I'll happily keep my spot exposure on a move like that through all-time high or whatever, but to catch the breakout long, that has been a fool's errand recently, or just, you know, not being so harsh. It's been a bloody difficult trade, and I don't think there's anything there for me to capture. On the other side, for dips, I'm reasonably comfortable punting / getting involved in the appropriate circumstances on a pullback to the bottom of the range / support, comprised of, again, the weekly 8200 level and the daily 8300 level, not on a limit order basis, right? I generally don't trade that often with limit orders, quite rarely, slightly more frequently as of the last, I don't know, 2 months, but still, it's not like my bread and butter. So if I get an intraday setup that is appropriate, and this is something we've discussed on numerous streams, towards the lower boundary of support, I mean, at least a daily close, and then even if the entry is worse, that'd be good enough for me. I'm more or less comfortable playing the range from A to B, and in that case, I might hold a little bit of that if it works in my favor, sort of, you know, take some profit at FTA resistance and then hold a kind of moonbag in case that is the move that ends up overextending through all-time high. So I suppose that's a very long... I'm really bad at English. Is it long-wounded or long-winded? I don't actually know. I think it's long-winded? Oh gosh, hold on. Long-winded, of course it is. Why am I doubting myself? Long-winded. So that's a very long-winded version of saying there's support to 8.2, 8.3. I'm comfortable having a stab there if I get the appropriate price action on lower time frames, right? In terms of developing scenarios from there, I really don't want to see this daily setup go, right? I really don't want to see this daily level at 83 and the weekly confluence at 8200 goes, because if the market's bullish, there's no reason for it to do so, right? You've already had the washout, deviation, failed breakout attempt. Those bears ate a plate, right? And we've re-established support higher at 8.2, 8.3. So for a really bullish market, this should have been enough, right? There's a huge open interest reset, wipe, whatever you want to call it. Yes, some breakout longers are getting wiped, trying to buy the all-time high break, fine. But then higher time frame support should certainly hold, at least in a very bullish market. Okay, so that should really hold. If it doesn't, that'd be pretty bearish for me. Again, within the context of level to level, not kind of macro bearish. That's nonsense. But from a level to level basis, this should be ironclad if the market's bullish, right? And if that isn't, then what makes me reserved is the fact that we didn't spike previous week's low and didn't fully or meatily test support at 16.1, right? And there's a lot of confluence at this level, both on the daily time frame in terms of the pre-breakout consolidation, right? But also on the weekly time frame in terms of we've got previous week's low, or I suppose it was the previous week of the breakout candle, a weekly low plus structure closer to 16K, okay? So what's the summary version for Bitcoin? Range, resistance, 19.4, support, 18.2 to 18.4-ish. My ideas, I'm not looking for any type of breakout long through structure unless it becomes super clear or I'm already long from lower, okay? So that's kind of not really on my radar unless something changes quite significantly. What is more reasonable to me is looking for an opportunity. I mean, daily close kind of bare minimum, but might have to take a stab on an intraday basis. Support, dip type of deal at 8.2, 8.3. And if that fails, then either just wait or look to flip in the short term to catch the move from lost daily support to retesting high time frame structure at 16.1. Okay, so I suppose if I had to do it in everyone's favorite format of squiggly lines or arrows, something like this, right? Or if this fails, A to B. Okay, 1 and 2. That's kind of what's on my radar for the coming week or however long this takes. Long-winded. Yeah, I thought so. Long-winded. It's just not an expression I use, and for some reason it came into my head, and I just... I usually say, like, that's very verbose, right? Because verbose does the same deal without having to use 2 words. BTC to 20k says, don't you think that if 18.5 breaks, it'll go to 16k? I mean, isn't that literally what I've said? I am spammer. Yes, I can see that, but I think we arrived at similar conclusions. My level's a bit lower, my support. Boundary is about 18.2 rather than 18.5. But generally, yes, if this moved down and the reclaim wasn't enough to be bullish, then I think we correct further. I think that's what's on my radar at the moment. Does that make sense? Was that helpful to anyone? Do you kind of see the logic from high time frames to low time frames? If it did, make sure to like the video, wink wink, nudge nudge, and I'll try to answer any questions that you have as well. Thank you, Biscuit Brains. Glad you're finding value. Thank you, Paul. Thank you. Okay, why is Michael Saylor buying 19.4k? Is he an idiot? I don't think he's an idiot. I think they've got a very peculiar treasury management strategy, which kind of requires that he buy up here regardless of price, I think. Do you ever think about fundamentals? Sure, yeah, if they're within my reach, so non-code based, etc. Yeah, I try to. How is Bitcoin worth 20k? Yeah, I don't know if that's really a fundamental per se, and that's something that really hurt me on the way up. Because I was getting setups to long on leverage at like 12, 13, 14k, right? And I'm sat there thinking like, who the fuck is going to pay 13 grand for 1 Bitcoin? There's no chance. Like, the technicals were screaming, don't be an idiot, Cred, fucking long this shit. And I'm like, come on, 13, 14k for 1 Chinese Bitcoin? That's mental, mate. Get out of here. And then the market obviously moons, and I feel like an idiot. Something Jules Salsa gets really right and keeps tweeting about it, because it's right, is that, especially for lower time frame trading, you just kind of need to fucking forget... or abandon those preconceptions of, oh, this is too expensive, this is cheap, etc. They're just not relevant per se. And if you're anything like me, they locked you out of a lot of good setups, right? Jules, not Jews. Jules. So yeah, that's something to be aware of. Especially if we enter some sort of mental altcoin frenzy nonsense. You'll be looking at these shitcoins, which are going to be at prices or even markups that don't seem real. Like, oh my god, this thing doubled. No way I'm buying it. But yeah, sometimes you got to abandon all of that and play the market as it is. I agree, Ryan. It's really hard to abandon those preconceptions. Jigsy McFly says, can you talk about back or forward testing? How did you find out your system had positive expectancy? Time. I started off by wasting a lot of time trying to backtest and be really strict with articulating setups, but my system is just so bloody discretionary that I've got a thread about this, which I'll try to link at some point somewhere. Maybe search crypto cred. I don't know what that bloody thread was called, but basically wrote a thread about how my trading system's evolved, and no 2 setups are the same. And I think the more, especially if you're kind of the price-based discretionary trader, yada yada type of guy, it's really hard to meaningfully backtest your setups, because it's one thing to look, identifying a setup in real time and backtesting for it are 2 completely different things. And I just think for a lot of discretionary traders, their time is better spent kind of forward testing, live testing, and making observations in real time rather than back testing something that's not necessarily going to be identifiable in real time and or isn't necessarily indicative of the type of setups that they'll be taking. And again, in my experience, no 2 setups are the same. Can they be close enough to be worth testing? Perhaps, but just not in my experience, you know? When is the market structure video dropping? Wednesday? I kind of want to say Wednesday. But yeah, it's these videos are a lot of work, right? And I'm not asking for sympathy here, because my schedule has been absolutely terrible with this thing. But the way it works is, let's say I want to do a video on market structure, right? So let's say I've got a point A, and then I'm like, okay, well, I explain point A, it goes to point B. Then I'm like, okay, well, I've got assumptions about point A that take me to kind of A1. So I need to explain that. And then I explain that, and I'm like, okay, well, that doesn't make sense without A3. And then, okay, that seems complete. Check. Then B, I want to go to C, right? Go to the next bit, but it doesn't make sense if I don't explain B1, etc., etc. So it always kind of branches out to being a lot more than it is actually, which is why the videos are so bloody long and detailed, right? I know I get a lot of shit for allegedly, because I disagree, allegedly repeating myself in those educational videos, but you have to realize, generally, for the most part, I'm pretty bloody concise when I'm trying to get across something which I think is important. So if my FTA video, for example, or trade management video is 1 hour, it would take most other people maybe 2-3 hours to get across the same type of content, or to the same depth, right? And trust me, it's okay, don't trust me, whatever. Believe me when I say that it's really easy to just shit out superfluous videos, being like, oh my god, crypto cred MACD tutorial, crypto cred whatever tutorial, and then just make them really surface level and shitty, but gain a ton of views, engagement, like, oh my god, thank you for your moving average video. But I won't give you stuff that I don't think is really just meaningful and actionable, and I also won't give you stuff that I don't trade myself and haven't used successfully. So yeah, that's kind of the bit about the videos, but it's coming this week. This week I virtually guarantee it. Okay, that's Bitcoin. Hopefully that makes sense. If it doesn't, let me know, and or replay this part of the video, I suppose. Yeah, in the short term, I'm not terribly bothered about, like, right now. You can just even see with how the market looks. Down here is interesting. Up here, less so, because again, I don't want to get involved in a trade like this. And right now, I mean, arguably at the bottom of an intraday range, right? So there's something there. Let's look at ETH. Flow Trader, I think your communication and teaching and explanation exceptional. Don't doubt your English. Most native English speakers can't express themselves as well as you. Thank you, Flow Trader. I don't very often doubt my English. It's just some terms, idioms specifically, I forget and have to check. Okay. ETH. We will look at ETH BTC for sure, Eli. And we'll look at Band as well. Right, so as you'll recall, I've been kind of locked out of ETH for some time based on the high time frame charts, right? And again, the reason for that is I had all sorts of confluence of support, etc., landing closer to mid 400s, right? And then resistance is kind of dubious up here. None of this is hugely compelling, right? So I suppose the only one which I think is decent enough is the monthly highest close at around 700. But even then, as we know, on monthly timeframes, price can really overshoot through this and then kind of close below it. So it's not like a hit and run level in itself. The only other structure, also this chart needs to get cleaned up. It's just a bit messy. Anyway, the only other thing which I'm hopeful for is some people have pointed out this level of resistance, cluster, structure, pre-breakdown consolidation, whatever you want to call it here, which seems to be doing its job at the moment. Now, the only reason I don't like this is because it's not really significant, right? Whenever we have the impulse, consolidation, impulse type of structure in either direction, right? You can have an impulse down, consolidation, impulse down. This is probably stuck in your, you see this diagram when you blink, but it's the consolidation which acts as support, resistance, etc., etc. Now, an extra caveat to finding high probability structures, or for these structures to work well, it's always helpful, or for me it's quite important, that the breakout leg which follows the consolidation breaks market structure, i.e. makes a higher high, right? Or in this case, breaks market structure and makes a lower low. So this cluster here, while structurally it's fine in terms of down, sideways down, or up, sideways up, whatever, nothing really happened, right? You had an impulse move down, it consolidated, and then it came into this base and made a lower high, right? So in terms of kind of bearish impulsiveness coming from the structure, it didn't really lead too much or didn't precede much, wherever you want to ascribe bloody temporal causation, whatever, right? Now, to contradict myself, I really hope this is an amazing level of resistance. I hope it works, because then if we get any sort of pullback, right, I could potentially have something on the table for ETH. But until it either resolves to the upside, close to 700 from one monthly range low to the other, or pulls back to an area which for me is technically significant, I'm going to avoid having strong views, at least on higher time frames, for ETH USD, right? On the weekly time frame, there are some, like, I suppose, classic signs of fatigue, although they're not terribly strong in themselves, but something to be aware of in terms of momentum slowdown. And that's when, first of all, just looking at the candle bodies, right? Big impulsive candle bodies breaking structure, and then really start to slow down in the past few weeks in terms of the actual size, right? Another thing is it's always helpful to see how the market is behaving at breakout levels, specifically on this time frame with the weekly. We want to look at previous week's high, and you're seeing this kind of fatigue pattern type thing where it breaks out above previous week's high and then closes below it, and then you had so again on the most recent weekly close. Okay, so that's just some sort of momentum waning stuff to be aware of. Yeah, on the daily time frame, it's kind of similar to Bitcoin, where you have a breakout of local structure, so a daily higher high. Bitcoin did the same thing, and it's kind of gone sideways since then. We have a level for Bitcoin, the kind of bearish retest level that failed, right? Down at 18.3, 18.2. I don't think ETH lends itself as well to that type of structure. The only one which I kind of want to pay attention to is this here. So, unless I've just pulled this out of my butt, this looks like at least lower time frame support reflect on higher time frames, or vice versa, whatever. This looks like support on ETH. You had lowest close, again, not a huge rally, etc., but, you know, bounce level, close below it, and then it seems to have been reclaimed and acting as support at the moment. Not an amazing level by any means, but just this under structure is worth being aware of. That's pretty decent, to be fair, as far as these things go. Do I have anything else to say on ETH? I mean, support, right? This is a decent level. Let me think about this. Yeah, two things to say. So the first is that just like or similar to Bitcoin, I had high time frame structure from the weekly at 474. It didn't get tagged on the move down, so I'm going to assume that continuation, if we get it, if support breaks, etc., it's going to retrace most of the move up from the low and come in towards this consolidation. That's going to be my assumption. The other point to make is I've got daily support right now. If market structure like properly or convincingly shifts on the daily time frame, so something like this, got this lowest close, right? If you get a close below it, then this existing structure becomes resistance. Lowest close, highest close, right? Close below, this becomes resistance, and that might present itself as an A to B sort of setup if appropriate. Okay, just something to be aware of. But for now, I'm for the sake of the stream at least, I'm comfortable adding 586 as a daily level of support. But that's sort of the best I've got. Bitcoin is much clearer to me. ETH less so, and will be clearer to me either at the high time frame monthly range boundary at close to 700, or back at the 460s, 470s, this high time frame breakout level here, right? So this gets a smiley face. This gets a smiley face. This is kind of like a frowny face. Well, it might become clear, but I'm not in love with this range per se. Okay, and again, this is all the streams. This is very professional, by the way. You know, years of trading, etc. All the streams are geared towards higher time frame stuff. So, you know, as much as I'd love to dive into hourly, whatever intraday details, it just doesn't retain value very well. So yeah, we'll probably keep it at that. Okay, ETH BTC. I haven't looked at this in a while, actually. What was I going to say? Yeah, ETH BTC really hasn't changed much. We had confluence of some sort of resistance at the lowest close pre-breakdown, as well as this old range high, and that's held at the moment. I think if we get a pullback in Bitcoin and ETH, right? If this, I mean, they're both near / at support now. So again, I'm just thinking ahead. I don't think ETH outperforms Bitcoin if the market pulls back. Just seems less likely. But generally, this area isn't one I'm totally in love with. I like to look at where there's space. And those of you who've been in previous sessions, the space is basically on a breakout through of this range high towards the next level of resistance. There's like a 50% move between those two levels, right? Something like this. So this, to me, is worth capturing as an ETH swing trade, alt season, DeFi pairs, aping in, whatever, right? That's where the opportunity is. Right now, for those concerned with short-term technicals, there's like resistance, support type of deal, really far less to capture or use for bias, you know, even just comparing the two. With regard to altcoins and what this ETH BTC retest, successful or not, means for altcoins, I really think it won't be totally clear, and I don't want to be the one predicting that relationship. I think if the market pulls back, I suppose I would lean towards altcoins pulling back as well. We've seen some of that today, just on these 2-3% moves. Altcoins pulling back as well, but in terms of these bigger breaks, like Bitcoin, whatever, losing 18.2 or wherever that structure is, that'll be a tough one. I think for altcoins, if ETH BTC isn't being a clear or straightforward proxy for strength or weakness, like that is my view at the moment, it's worth just looking at them individually, be it the DeFi pairs or whatever it is that you track. Sometimes ETH BTC is a fantastic index, if you will, of sorts for altcoin risk appetite. Other times it's less clear for me. It's just less clear. Was anyone here in 2017 when Venture Coinist had this huge ETH BTC channel? And when ETH BTC was like up here, you'd sell alts, and when it was down here, you'd buy alts, and it would work like insanely well. And then the bear market happened, and the channel died. But that was a fun time. Let's look at some altcoins. Jigsy says, do you apply the same trading style to traditional markets? I don't trade traditional markets, so I don't want to comment because I have no idea. Are you using also some indicators? You trade only, I mean, for the most part, only based off of price action. I'll sometimes glance over at like funding, open interest, etc. But it's very recent. It's not part of my system, and maybe just for some contextual clues, usually from people smarter than I am or who understand that side of it better than I do. But for the most part, it's market structure and levels have done me pretty well. We will look at XRP as well. So for Link daily, we might need to just revisit this generally and reevaluate, because for me this cluster was technically significant. It got reclaimed, then we had the Bitcoin pullback here, and then it's just been chopping both boundaries since then. So I'm happy to remove this, and probably going to stay away from particularly strong views for the time being. What I will do is remap some of this stuff on the higher time frames, which just tend to be more reliable if lower time frame levels are being chopped. So we're going to use this weekly cluster bottom here, right? And this as the weekly cluster top. We're going to ignore most of kind of this retesty type of structure, because whenever price doesn't base and either just slopes down or up like that without having any period of more significant trading before a breakout, the slopey stuff, the fluff, in my opinion, it's not as reliable support resistance. So I'm going to ignore most of this, although I think this might be valid. I'm still going to ignore most of this and add weekly structure closer to $8. Cluster top. Weekly cluster bottom. Duck is pulling Link with his magic. Yeah, I suppose he is. Yeah, and that aligns pretty well with some of the other levels. So yeah, that's going to be my, I suppose, our map for Link. I'm sure there's some totally valid trend line that can be derived from, especially if you really like curve fitting. I'm sure there's something that's totally reasonable that can be derived from this area, but if I'm not going to trade it, it's probably not worth having on the chart generally. So in terms of ideas, if this is our week, if this is our range defined largely by the weekly time frame, 15 to 16 is, and to be fair, to our credit, we did talk about this consolidation here as resistance, although not as persuasively perhaps. We have high time frame resistance here and high time frame support here. This is our range for the time being, right? So for continuation trades, something like this, or I suppose the easiest way would be get Donald out of his short, and this thing can probably go up. I think any break either back into the boundary or certainly above the upper boundary would be a good send signal, right? And at that point, all of these positions taken up on the impulsive move would be underwater, so that's an extra benefit or catalyst. On the support side of things, for deeper dips, I mean, we'll just use our basic technicals, right? Resistance at the range high, support towards the range lows, which falls at about $7.5 and $8. For the time being, yes, there are lower time frame levels, which are fine and interesting, but it's worth, I think, keeping a... I'm more than comfortable just sticking to these for the time being. And the Link BTC pair, which we wrote about in Technical Roundup, and we're going to write up tomorrow again. So make sure you're subscribed to the newsletter. It's free. Thank you to Bybit. So if you just want the levels and nothing else, make sure you check it out. TechnicalRoundup.com. Link in the description. 1 email per week. We don't spam you. There's no nonsense, right? And we wrote about the BTC pair. Oops, where have you gone? The BTC pair retesting resistance, the lower boundary, right here. Not here as in at the wick, right? It was wherever it was, right? This was after it closed below the level. This structure is pretty important, right? It's the first consolidation after the macro range breakout in Link, right? So back to the good old impulse, consolidate, impulse. And it looks like after doing its job incredibly well for literally months, right? Upper boundary support gets flipped, upper boundary resistance, lower boundary support, you know, ping pong, etc. Looks like a weekly breakdown in the Link Bitcoin pair at the moment. So unless it leads some sort of heroic reclaim, which would look, I mean, it would have to look really strong, right? I mean, no shit, but I mean, like a real weekly engulf back into the range, that would be a potential full send scenario, and then all these wicks or all the cells taken up below structure would be underwater, forced to puke, etc. That'd be great, but in the absence of such an impulse, even just using or employing a basic level-to-level structure, if the bottom boundary of the range turns to resistance, which is doing at the moment, or remains resistance, the expected target of that downside move, for me at least, or the next level of support, would be closer to 50s at this untested breakout level. Okay, so that's the BTC pair. I know the Duck is more bearish, Link BTC. For him, I think This is like mostly a completed type of market cycle type of deal. Unfortunately, as fun as that would be, my framework doesn't allow me to have such strong views, at least not from a trading point of view for that sort of stuff. So I'm just going to pay attention one level at a time. But there is an element absent a reclaim of kind of lookout below, because again, from level to level, that's a 30% move there, which is non-trivial to say the least, against Bitcoin. We're almost at 100 likes in the video, by the way, and thank you so much if you've been hanging out, enjoying asking questions, and make sure to join your colleagues at the like button if it suits your fancy. While I check the questions, we will do some more charts in a moment. RSR, Aave. Yeah, we'll look at Aave. Aave? I don't know. YFI is really interesting. Ooh, do I add this weekly cluster here? Maybe. Chat, do we add this weekly cluster here as a level? This is just entirely down to you. Yes or no? I know it's a bit late. I mean, not really. It's where it's at now. Yellow says no. No. You'll want this to go up, so there's no resistance. The no's have it so far. Gosh, everyone hates it. Okay, no resistance. No resistance allowed. I'm convinced. Not a single yes. Wow. If that ends up being the top, I'm going to be very angry with all of you. Yeah, going back to the daily time frame, this thing, the Thanksgiving sell-off closing above the level ended up being the bottom. That's positive, right? That's good. And again, the pattern looks almost exactly like Bitcoin, right? You had a breakout through daily structure, and then the market just floated back and started to chop at lower time frame support, right? You had the same in Bitcoin, same in ETH. We had a swing high, pull back, higher high made, and then just chop. And that's where YFI is at the moment. If I were charting this or trading this intraday, whichever, I'd be fine with these technical structures here, premised on the breakout level and the breakout consolidation. But generally, from a higher time frame point of view, I don't think it's as significant. Yeah, so look, I mean, the bottom boundary of the range has been reclaimed. We're generally expecting a move towards the top side of the range, and it looks like we're more or less just eyeballing it, chopping around the midpoint at the moment. So from a swing point of view, trading around the range midpoint is fine for lower time frame trades. So, you know, I'll leave that to your discretion. For high time frame, bullish continuation, whatever, I mean, breaking back above the range high is what you'd want, but the probability of finding an easy trade there is quite low. I just don't think it'll be that, you know, as easy as it looks, so to speak. Although it does have the benefit of the never fake out twice setup, right? So this is our resistance. It faked above it and then pulled back close enough and sold off, right? So you already have a fake out once. What's very rare, as you'll know for price to happen, well, as you'll know if you, I suppose, agree with me, is that for price having, you know, returning to a level which is already faked out previously and then faking out again, like close above, oh look, it's the same thing, it closed below and it died. Like, that's quite rare, especially on high time frame instruments which trade well technically. The double fake out sort of thing isn't real or isn't too frequent of an occurrence. So I suppose I kind of changed my mind on that. If it does break back above the top of the daily range, it probably isn't a double fake out and is much more likely to be an actual breakout. So that might be a thing, right? And then obviously your objectives for that are previous highs and then God knows round numbers, I suppose. On the dip buying side of things, again, intraday or really aggressive, this is the low set on the reclaim. You want a higher low on this consolidation here, which lands at God knows where. You can add it to your own charts. But the more kind of do or die, closer to invalidation setup is obviously back at the daily range low, closer to 22,000, which is insane to say, 22,000. But yeah, that's it. High time frame aggressive, back above the range, probably not a double fake out. High time frame, oh my god, please, this better be the bottom. Back to the range low at 22s. Intraday, low time frame trading, or just daily market structure based, you know, low, higher high. Where is a reasonable place for the higher low to form? This consolidation here. Okay. And I still think the top of the range, if you manage to get involved either at structure, if it fits your fancy, or at the daily range bottom. We've reclaimed the bottom boundary and done a ton of trading there. And the top of that boundary is still untested with a nice swing high there as well. So this remains an area worth your attention. Yeah, and against Bitcoin, not much has happened, really. Very similar type of thing. Reclaimed a big level and just kind of moved sideways type of thing. I agree, Paul. Double fake outs rare setup is pretty solid, mate. If you get your time frames right, certainly. DeFi. Uni, again, it just got pretty choppy pretty quickly. I'm going to add... Do I want to add this level? I'm tempted to do something like this, but I feel it might be just curve fitting at this point. I think I'll probably keep it as is. 3.9 is still doing its job as resistance. It did fake out once, right? Great level, faked out, and then it's still kind of doing its job at the moment. If you use the body, wick, whatever, coming off of here, this area. I still think, in a similar fashion, the double fake out thing is rare. I still count this as a bearish retest because, I mean, that's not a close above structure, is it? I think a similar logic can be applied. An actual reclaim of the range low probably has something to it towards the range high. That's a kind of $4 to $5, which in percentage terms is pretty decent, right? Again, with a lot of these altcoins, there's a lot of space, 30% or so. That would be reasonable, but for now, this looks not very pretty, to say the least. On the Aave side of things, gosh, looks like we need to update our chart a little bit. Going to add a daily level here if this thing is going to keep stepping upwards. This went really deep on the Thanksgiving dump, right? We were paying attention to this cluster here as support, and you technically got a bullish setup if you're aggressive at least. Yeah, the breakdown, right? And then the quite clear close back up of the level. I didn't get involved in there. I did want to buy the upper boundary of it after this close, but didn't get it. So tough tits. And that's, you know, that's just been stepping up quite nicely. This is just kind of an odd spot. I think there's the same risk of just trying to trade the breakout and eating shit. And I'm just not a very good breakout trader, so I'm not going to pretend I know how to make the most of that type of setup. For me, a retest of daily support at 79 is really the first reasonable area to start paying attention on the long side of things. Yeah, and if this thing is really bullish, it should just keep stepping up kind of as it has been along the way. So $80 or so for Aave. Maybe if Bitcoin and ETH put in some big candles, that'll be the play. If not, then the final level that I'd be willing to be an Aave buyer in this range at least is this cluster, which, again, I missed the entry initially because didn't retest the upper boundary at 67. So if we get something like, okay, big move on the majors, etc., the support resistance flip and the aggressive breakout buyers are eating shit, I will comfortably give that a stab, if appropriate, to the at the untested level at around 65, 67. Yeah, but it looks good. Looks like a diamond top. I don't know. Look, I'm not a breakout trader, so this isn't the type of thing I buy personally. Trend is your friend, etc., but it's just not for me. The areas which are much more reasonable, or where I'm more allowed to participate, is at these lows, which is a daily level, and if that fails and this is like a big excess, then at the more or less high time frame untested level at 64, 65, etc. SNX hasn't really done much since the last session. When was the last session, man? The 30th? Yeah. I think we discussed how I generally don't love these lower high structures, which then get, you know, when you get that type of break in market structural reversal. The only real area where I like to do business is the last cluster before market structure was reversed, right? This is the swing up, lower low, and then a reversal in that structure. So that's really the area where I'm most comfortable. And from that point onwards, it's like, yes, technically every preceding swing high is resistance, but they function better as kind of targets if you catch the reversal trade, which will be in the market structure video, by the way. If you catch the reversal setup, these levels are fine because they're nice areas to scale in and out, take profit, etc. If you're flat and looking to get on some sort of momentum continuation entry or just a resistance to support flip, they're pretty ugly generally, as the market has shown no hesitation to demonstrate. So not much going on here. Band. Yeah, look, I think this cluster, I mean, yeah, it is on the weekly, but it more or less comes from the daily time frame. For me, at least, it's not really anywhere from a high time frame point of view. Like, of course, we could zoom in and look at lower time frame market structure. You know, even on the daily time frame, find some resistance, etc. But really, I like to keep my charts less cluttered and with more emphasis on areas where I can actually do business. And for me, it's the upper boundary of the cluster at $4.50, lower boundary of the cluster, kind of range high, range low, at $3.3 for dips, what have you. And on the momentum continuation side, a reclaim of the breakdown, right, through $10 more or less. Where it is right now, I mean, just like a lot of these pairs, they've held up reasonably well, but ooh, did I just crash? Can you hear me? Is everything okay? I think my PC bugged out for a moment. Let me know if I'm still alive and well. Okay, everything's cool. Sorry about that weird technical glitch. So yeah, I try to keep things in perspective and the levels where I'd want to do business rather I'm looking for business. So range high, fine. Range low, fine. Momentum continuation, reclaim the breakdown at 10.3, fine. But again, like a lot of these DeFi pairs, just moving sideways for now. Nothing really attractive or impulsive enough for me to get involved, right? On the sushi side of things, this is one I'm really annoyed that I ended up missing because it behaved so well technically. I've just been complacent with a lot of these altcoins. I think this is like the only level we had as support. This cluster, again, impulse, consolidate, impulse. Not only did you get a daily close above it on the Thanksgiving crash weekend, whatever, but I especially have no excuse in this case because it came back and retested the upper boundary here, which is, I mean, what more can you ask for, right? And at that point, it's pretty risk defined as well, at or near enough to this low. Since then, number go up, entering like an area of resistance. I know we've got this wick as the last low pre-break, but more generally, we could just delineate this pre-breakdown consolidation, right? Lowest close, highest close before the nuke as an area of resistance. So for me personally, if we get that type of pullback, as discussed, I think the nice and for now untested level lands at 177s, right? That will be reasonable because I really don't want to chase this thing on the bullish side into just this cluster here. I mean, God knows if it finds any resistance at what boundary or where it reverses. And I just think the eat shit potential on that is pretty high for breakout longs into that structure, unless you have some sort of edge or know otherwise. So for me, in terms of good pullback levels, support, etc., which haven't been tested yet, the 177 one here is pretty decent. If it wants to come back to this cluster, fine. It's probably just because of how close invalidation would be. I think that I'd still be happy giving that a stab, but from an aggressive kind of market structure point of view, right, you've got a higher high, and then the first area to really find support, I mean, obviously is just anywhere on the breakout number go up, but the first area on a pullback to find support is the high where market structure was broken or where the last higher high formed, and everything kind of aligns at the 177 handle for that. And again, trouble areas or targets, if that manages to set up, it's a tough one. For me, it would still probably be a kind of A to B type of setup because I'm not comfortable with this. Yeah, that's pretty much it. I know, Mush. I know. That's fine. Curve is interesting. It still looks decent enough, but it also could be the case that the level's getting chopped. It hasn't reclaimed anything yet, right? So this thing based down really cleanly, right? You could just see it just, you know, did a very nice job of doing that. And then we started having signs of reversal, and we discussed kind of, you know, lower highs, lower lows, etc. Trend's really aggressive. Then you have a period of sideways, which is a slowdown in the downtrend or reaccumulation, whatever. And then you get the first break in market structure. You get a dip into a higher low, and then it basically does the opposite side of that, right? So clear trend, sideways, then trend reversal, right? And the opportunity of the point of so-called maximum opportunity is obviously at the lows, but generally the easier part to trade is the shift in market structure before the markup, right? And there was some evidence of that in curve at this 0.64 level, but things have just kind of gotten a bit choppy since then, right? This is where market structure first shifted or was broken, right? On through this swing high. This was the Thanksgiving dump. I mean, possibly this is kind of a deviation, failed breakout that has been reclaimed. But for now, it's not the type of impulsiveness I'd want to see if that setup is valid. I still think that diagram idea of, you know, strong trend, slow down in the trend reversal, and the break in market structure happening somewhere around there, that is still reasonable, but it needs to break back above something. And the 0.888 previous lowest close turn swing high resistance is a pretty good candidate for that. So, I mean, really aggressively, is this support just on a purely technical basis? Yes, sure, that's fine. That's kind of good enough. But for, I think, the easier trade, it'll have more momentum behind it, is a push back above 88s. And that would look pretty good at that point in solidifying this reversal structure that we discussed. And managing the trade would be pretty decent in terms of targets, etc., because it's just based so nicely on the way down. So if you get a flip here, your objectives are set out for you as well. You want to scale off, re-enter, etc., etc. That would make sense. I know there are some fundamentals, supply and emissions schedule, whatever, concerns with this, but, you know, if it wants to behave well, I won't look down on it, right? But yeah, it's leaving me wanting a little bit. Support decent. I think the better trade is through resistance, right? And that's a question to be aware of, right? If you're bullish an instrument, depending on how it's set up, it's worth asking yourself: is this one where I want to buy support, or is the easier trade a break back above resistance? And one of the famous examples, I mean famous because most of us, I imagine, were there for it, is the Bitcoin break at 6K. There was a lot of knife catching attempts at 5, 4, 3, stuck in the range, lose all your Bitcoin, etc. Whereas my basic argument on the 6K break was that, why don't you just buy when it's back above 6K and it'll probably go to 12 or something? Did I play that perfectly? Absolutely not. I had to get Hisaka to snap me out of my disbelief at like 6,600. But overall, the idea is valid and the framework is valid as well. So do I want to buy support? Is it good enough? Or am I comfortable playing the break of resistance? And that's a question that's kind of different on every chart potentially, but you know, you've got more than one choice. Rune, this is an interesting one. It just hit the cluster top and bounced since then. It's just kind of getting stuck at local highs. That's fine. What I will add is actually a daily cluster here. The highest close and the lowest close kind of in a very similar fashion to this. And again, this was the consolidation which preceded a break in market structure and got engulfed, right? So you have a consolidation. The move that followed made a lower low, break in market structure. That's quote-unquote bearish and should be resistance. And then it gets smashed on the way up. So it's expected to be support. I'm comfortable adding this. If this sector, right, if these move down and reach kind of nearby support levels, which for a lot of these aren't too far from market. Assuming daily close above the cluster bottom, that's reasonably risk defined for a range to range play, if not back towards the highs set previously. If this cluster fails, this consolidation, and we've seen that these reversal structures are pretty significant in themselves. If that fails, then it kind of be a Bitcoin bearish retest type of thing failing as well, right? And then there'd be a swing from A to B at that stage. Yeah, A back to the cluster top. Could go up, could go down, not exactly, right? For now, as long as the structure is intact, I want to be a buyer on a daily close which respects support at 84.30, especially if it sets up appropriately. Like if it closes, daily close hits here and closes up here, it's just not as valid, right? I have to exercise my discretion. But generally, I'm fine buying the bottom boundary of support. And if it fails, take it back into this cluster here. Just one level at a time, 2 clusters in play, and basically treat them like any other range, right? Like when a market, if you have a market in a range and it breaks out, where are the areas to do business? I mean, your most aggressive one is at the upper boundary, more likely to get filled, right? And your closest one to invalidation, your do or die type of structure, is the range bottom. They all have their pros, cons, and trade-offs, right? In the same way, when dealing with these clusters, the upper boundary, yes, more likely to get filled, more aggressive. Lower boundary, better risk reward, close to invalidation, less potential for drawdown, etc., etc. I'll look at RSR and we'll look at Kava and then we'll round off, I think. Is there a better ticker for this? RSR USDT, is it the Binance pair? Let's take a look. I'm not going to get any high time frame data, am I? I mean, this is all right. I don't love it. Oh, you want it against BTC? Okay. It's not really doing much against Bitcoin. This thing is just moving sideways for now. I don't have any. I can't arrive at any strong conclusions here. If there's a setup at the bottom of the range, right, like here, so you had support, dip below it, strong buyback, and if this ends up being a rounded retest, that would be reasonable. But where it is right now, I could just add levels, but they wouldn't mean anything, right? We looked at band. You'll have to scroll back and take a look. Nabella. This is kind of it. Cluster top, fine with me. Cluster bottom, also fine with me. Where it is right now, not too interesting from a high time frame perspective. If it just melts up, instead of FOMOing in, I'll probably do something like this if it sets up appropriately. RSR on Huobi, okay. Okay. Look, let's do this. So this breakout was significant because it just cleared out a lot of the potential resistance structures based on these consolidations, which is what we're going to map out, to be honest. This being support. Below this, it just looks like a pile of shit because, again, this impulsive move up is what cleared out both in terms of market structure and levels of resistance, so that's important. In terms of resistance, I'm comfortable adding the lower boundary and the upper boundary of the breakdown. Yeah. So range bound is the answer, and it's bang. Look, if this is like high time frame support that matters is here, and high time frame resistance that matters is here, we're pretty much bang at the bottom of the range, in the middle of the range right now. So not going to have particularly strong views until we either reach support, in which case this looks really nice for a kind of dip buy close to the bottom, if appropriate. Again, with a lot of these, if the market's pulling back, altcoins will pull back harder as well, but also just bounce harder a lot of the time as well, right? So it's worth being aware that these structures don't have to be respected perfectly by any means. So these levels are signposts more than anything. For momentum continuation, I mean, near the highs, I know it's not the most comfortable area to do business, as we've seen in Bitcoin recently. But again, a range breakout there is probably valid, or even just closing back above and through the old high. There's probably something there. More comfortably for me is a retest of support at 116, 115, thereabouts, this cluster here. For now, I wouldn't be too keen on this, just because, again, this matters, and where it is right now is slap bang in the middle. And let's add this as well to our watch list, why don't we? Okay. There we go. We have another entrant to the DeFi blue chips. We've had a chance to look at Bitcoin, ETH, BTC, Link, and all the other stuff. Hopefully you've learned something. If you have, make sure to like the video if you haven't already. That kind of stuff helps us a lot. And subscribe to the channel. Thank you to Bybit for sponsoring Technical Roundup. Their links can be found in the description below. It's the most direct way to support the stream beyond likes and subscribe button clicks. And their Jingle Brawl, which is coming up, is something to keep an eye out for. If you want to see some content around that, let us know in the comments below. And for those who want XRP, Litecoin, and all that other Bitcoin Cash, EOS, all that fun stuff, head on over to TechnicalRoundup.com. It's our free weekly newsletter. It's just no fluff, no spam emails, just pure levels and analysis. Comes out tomorrow at 8 p.m. UTC, so we'd love to have you on that list as well. We respect your privacy, etc., etc. Thank you very much. Very nice hanging out with you, guys and girls. Hope you had a solid weekend and a productive trading week ahead. And I look forward to seeing you on my market structure video on my channel when that comes out later this week as well. Thank you very much. Take care, and I'll see you there.